Profits at Sienna Senior Living up by more than 20%, adjusted net operating income in the latest quarter. And of course, the federal government is talking about rapid infrastructure building across the country. We've got a growing senior population. Let's get more from Nitin Jain, President and CEO of Sienna Senior Living. Great to see you.
You as well, Andrew.
Just remind us, so you're about half and half long-term care and half retirement residents. And the former is seniors who need much more care and attention.
Correct. Yeah, so we are one of the only diversified public company which has 50% is long-term care, stable, predictable, grows in line with inflation. The other 50% is retirement living. We have everything from independent living to memory care and assisted living. And what is happening in retirement living is people are coming in older, they need more care, and they don't want to change places. So having the portfolio that we have, close to 100 properties, now it has working extremely well for us, both on the predictable side and the growth side of retirement.
And long-term care, you say, is a super stable business because of the enormous unmet demand?
Well, first of all, demographics are significant in both retirement and long-term care. But long-term care specifically because government tells you how many beds you can build. And we didn't build any in Ontario for nearly 20 years. So now, finally, we're building thousands and thousands of beds, but we're behind. So there are 50,000 people on a wait list in Ontario. So those beds are at 100% occupancy. There's long waiting list. And not only the waiting lists are long, but government now understands it is one of the most efficient way to take care of seniors, and is also the most appropriate way to take care of seniors because it is a home-like environment versus a hospital. So we are in Ontario, British Columbia, and Alberta for long-term care, and all those three provinces have a huge focus on ensuring that this sector is funded appropriately.
Because in some cases, seniors who are unwell are in hospitals, and that's enormously costly.
Not only is costly, it's not the right place for them.
Yeah,
and it also delays surgeries for everyone else. It put a huge burden on the medical system. So this is really a win-win for everyone.
Your yield, something like 5.5%, and you say you can comfortably cover that distribution right now?
Absolutely. You know, we did extremely well. Our stock price did very well last year. And one of the investors said, it's too bad I didn't buy it in January of 2024. I said, well, the best time to buy was January 2024. The second best time to buy is today because we still are hugely undervalued.
Right. Now, so you're headed towards in retirement residences. Your target here is to get to 95% occupancy. Where are you at, roughly, in retirement residence right now?
So we just closed at 92.5%, and we are on track to be 95% by Q1 of 2026. All indicators are leading that we will get there.
And how many homes are you how many long-term care beds are you building right now?
So we have currently 480 beds under construction for long-term care, and we would build next year, we'll build a couple of other projects depending on if there is appropriate government funding. The total amount of long-term care beds we intend to build over the next 5 to 7 years are close to 2,000.
Doesn't sound like very much. I mean, I know it keeps you busy, but it doesn't sound like that'll make a very big dent in the shortage.
Oh, I mean, we alone cannot make a dent. We have around 5% of beds. Around the province, there are around 10,000 or more beds which are being built. So everyone is on track to try to do the best we can. But you have 20 years of not building beds and the demographics of people who need more and more of that care. So this is going to be a bit of a challenge, but I would say everyone is trying their best to get us there.
How is it on the labor front? Because that can be a problem for your industry. Are you getting people?
You're absolutely correct. That not only is the biggest constraint, it is also the biggest cost. We have 15,000 team members, and the only way we get to do what we do is through our team members. So we have a SOAR program where every employee in our company is a shareholder, and we just expanded it, where when they complete a milestone, 1 year, 3 year, 5 years, they all get stock in the company. And we are seeing the significant impact of that. Our turnover is down 30% for 2 years in a row.
I'm sure people love that. Yeah.
Oh, absolutely. Yeah. You go to a midnight, you meet a midnight, someone who's working at a night shift, and they tell you, I'm a shareholder in the company. It has a different sense of ownership and pride.
You have a lot of part-timers in the industry, though. Do they get equity?
Oh, absolutely. Both full-time and part-time people get equity. There's obviously a bit of a difference. And we have more and more full-time opportunities open in our company and a lot more growth opportunities as we are growing as a company.
What about getting construction companies to build places? Is that hard? Is there a shortage of companies?
There's a shortage of good companies. Our goal is to work with good companies. We have incredible partners. We have 2 long-term care projects. One is a campus. It has both retirement living and long-term care. Very difficult to build retirement, but because we're building a campus, it is economical for us to build that.
Why is it difficult?
Because rents need to go up another 30% for retirement homes to become profitable to build. But when you're building a big campus and your cost is divided between two, you need one kitchen, your housekeeping is one, we can in fact do that. And to do it right, you need the right construction companies. Both of our projects are running a bit ahead of schedule, which usually never happens in construction. And I hope it stays that way as we open in the next few months.
Yeah, that's kind of unheard of. So you reckon that, I mean, people look at retirement residences and they're not cheap, but really they need to be 1/3 or 30% higher to really justify building new retirement residences?
Absolutely. Rents have gone up, but they have not gone up as much as construction cost and interest rates. One of the things we are seeing, Andrew, is residents in retirement living are staying at home longer and coming into retirement living at a later stage. They have a lot of home equity built in. And the residents we are getting into retirement homes, they're not making a choice between staying at home or moving into retirement home. They're making a choice between staying at home with some help, staying with someone else, or moving into a retirement home. And in that case, the retirement home sector continues to win, and continues to be a lot of demand for it.
And I think you said if on locations where you have both long-term care and retirement residences, that people can flip or can move when the time comes from the retirement residence to the long-term care?
The admission to long-term care is controlled by government.
Oh, of course,
but
yeah.
in most cases, when you are in the same building, if there is room, government would probably move you in the right place, but that's not something we control. But from a resident perspective, it does give a sense that I can potentially move there. And not only from a resident perspective, from the back office perspective, being able to make it more efficient, having both lines of businesses is extremely important.
Nitin, thank you very much.
Thank you very much, Andrew.
Nitin Jain has been our guest, President and CEO at Sienna Senior Living.